Lloyds Look, Thursday, 14th of January. First of all, we'll start the yearly look. And you can see here, since 2008, we had this large fall with the financial crisis, and the low of 2008 was 55. So that's the long-term support level that comes in there at 55 pence per share. Okay, we'll look at the monthly, and you can see here that on the monthly, obviously since 2008 low 9 through to 2016, we've been going gradually sideways. The highest it got to on the recovery was coming at 78, and then obviously prices fell back again to test the low in 2012, and they hit a low of 21 pence. Since then, you've seen an up move up to 89 pence, just below the 90 pence. I've drawn a Fibonacci retracement from the low here to the high, and you can see here 23% comes in at 73.37. We have now clearly broken that on a monthly basis. So we look to next support come in at 63.46 pence, and that ties in nicely with the 200-day on the monthly, so it's 200 monthly moving average. And obviously you can see the long-term support here is at 55, below the 50% recovery of this bank in shares. Then we drop down into the main chart, which is on the weekly. And you can see here, since the beginning of middle of 2014, let's put October here. Oh no, the low here, we start from 7th of April 2014. We've had a gradually rising share price in Lloyds, and we hit this high here. Then we've had a downwards trend, which has come back in here, and obviously coming to a low on the beginning of December the 7th. So we've got a low and we've got a high. So if we take the Fibonacci, this is a retracement of this up move here. So we're looking at projection target. First target comes in at 64 pence. And next is 62 pence, which comes in on a retracement angle from the low of 8th of April on a 60% retracement. So that is the line in the sand, 64 pence. As we speak at the moment, it is testing the 200 weekly moving average at 65.75, live price 66.47. So I'll be looking to go long at around the 62 mark, with the stop below here at 57, and a long term take me out at 55. Just see our daily price action, and you can see on the daily price action that we've got this trend in place, lower highs and lower lows, and you can see here we're coming down to test this bottom trend line here at the moment at 65. So look for a short-term bounce. RSI is oversold. The most it's been oversold since August of last year, but we've got no divergence, and the ATR average move is £1.60. And just finally look at the 4-hour chart, and you can see here this morning we've got a gap down. That is a bearish situation. That's the second gap down we've had. We could call this a measuring gap. So obviously until those gaps are filled, look for no reaction on the upside. So thank you.